So I mean, the interest rates in Japan have been relatively low, right, compared to the other developed countries that have chosen to increase their interest rates. How do you think this would impact the Japanese market if the BOJ suddenly says, oh, I want to increase interest rate? Do you think they'll do it?
So Japan historically, low interest rates has been their policy. In the short to medium term, that's really not going to change from a practical point of view in terms of, when an investor I was speaking to earlier was looking to buy a hotel, he got 1.6% interest rate on a fixed term basis for 5 years at 60% loan to value. Those sorts of main drivers that we're concerned with from a real estate investment point of view, that's fundamentally going to still hold true. The last year and a half that we've invested in Japan pre-COVID, as we come out of COVID, we still have an 18 billion yen facility with our major debt funder that will still be there for the next 3 years that they've committed to. So from that perspective, that still holds true. Now, there are, of course, different economic drivers and macro policies that the Bank of Japan is managing. And in many ways, they have to stay nimble. Many of you have probably seen the articles of kind of hedge funds that try to play the market in terms of the currency. They've surprised us in a couple of steps, partly to kind of manage with that. What's going to drive fundamentally and materially the interest rates of Japan and the currency is going to be other central bank policymakers that's driving the world.